Okay, fine. I'll start the webinar. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I have given between 8 and 8:45 GMT today, November 12th, tracking the forex market together, part 1. Now I'll be presenting part 2 of the webinar. So I'll explain mainly the market reading and the trading strategies, what you can use in the market so that without any market fear, you'll be able to handle the trades and consistently earn from that market. So it is basically as a very simple market tracking technique. So let me just show you how exactly we go about in a market tracking. I use the derived forecast, which is statistically derived, and that is used as a guidance. And that forecast, I have shown it during that of the part 1. And on Monday, I presented this particular webinar. And at that time, I just displayed what are the expected market moves for this particular week. And today is 12th. And quick rise and slide were expected during Japanese session, and a dip during that of the European session, and then rise. So we are still in the European session. From 8 to 8:45 GMT, I just explained how exactly when the market is near the low, we'll be able to take a buy position, and when they gain the levels, we will be able to book profit around 14 GMT. And now we are at 13 GMT, so we have another 45 minutes in the webinar to book profit. So I have not booked the profit. And the US session is from 14:30 to 21:30. And they are expected to make swing and rise moves for today. So the expected market move says that Euro and GBP are expected to gain the levels. And then we fine-tune the market reading, fine-tune the forecast using the market reading. We note down around 3:30 GMT the initial lows and the highs set in 4 majors and 2 commodity pairs and use them as a reference level because the players also use them as a reference level in order to make their types of moves, and thereby they will be able to effectively handle it in a coordinated fashion, all the markets. So I noted down the initial lows and the highs in the case of Euro, GBP, and also other pairs, and I'll just display it again. So Euro formed the initial low around 1.3390, 1.3414 is the high. They've just breached the high by 2 pips. And now, during the late European session, the late European session is from 12:30 to 14 GMT. So they are gaining the levels. And in the case of GBP, 1.5965 was initial low. And from there, they quickly made that drop. I was telling you that they are making an extended downward move, both in the case of Euro and GBP. And they are likely to make further downward move, probably after about 1 hour. And last 30 minutes, they will stop cutting the new low. Then we can take a buy and then quickly book profit. Since the webinar was from 8 to 8:45 GMT, I had taken the position and I wanted to show how exactly I handled it. And once we identify it is an extended downward move, we can wait from that of 8 GMT up to that of 10 GMT and then try to take a buy position. But instead, I had taken around 8:30 GMT, the buy positions. Still, I will show you how exactly I handle them. Then 1.5965 was the initial low and the high is not breached in the case of GBP. And in the case of USD-yen, 99.60 was the high, initial high, 99.11 was the low. They are not breached it. But from there, they gained about 20 pips. And then 99.72, currently they are holding it. In the case of USD-CHF, 91.92 is the initial low. They breached and formed 91.81 and they are below that now. And 92.11 is the high and they just made an upward move also above that 92.11 and went up to 92.26. So if you notice carefully, they made a brief upward stop and followed by that a downward stop here and simply consolidating USDCH. And when USDN was gaining levels like 56 pips, USDCH was not considerably gaining at that time. So that is mainly to drop GBP-CHF cross. That is why when GBP was making a big drop, CHF was holding at a lower level, even though USDN was gaining some levels. So that is how they handle the crosses during mid-session. So we have to ideally book profit only during the late session. Then in the case of Canadian dollar, 1.0465 is the low, 1.0487 is the high. They breached the high and they are staying above it, and they are likely to slowly gain the levels in the case of USD CAD, as it is staying above that of the initial high, very similar to that of USDN, what they had done it earlier. Then in the case of Australian dollar, 0.9326 was the initial low. They're just holding it below that, 93.12. They formed a new low and holding around 93.20, and 93.90 was the high. But still, they are holding below that, so they will try to consolidate here. Still, you come across the moves in the majors and the commodity pairs are less than 75 pips, excepting GBP. As I explained, the GBP is a currency which is used to create the market sentiment. And exactly they have done it. And also, you know very well, quick moves or false moves in the market. So they had done a very quick drop for the data release and CPI data release, and then subsequently they simply reversed it, and now they have cut the high in the case of euro, and they are just going above. So we are noted down the initial lows and the highs as per that of our market reading technique, and then we will use the trading strategy. That is based on the focus in the market reading. We enter and exit only during the quick market moves time. So we identify the type of moves, and if they are making a stop and then we try to take a position. And if they are making an extended move, we wait for 2 hours and take a position. If it is an intentional move, we wait for 2 sessions, and at the start of the 3rd session, we try to take a buy position so that we will have a definite profit in that. So in order to understand, let me just show you. I'll explain the timings also. So 8 to 14 GMT is the European session. So 12:30 to 14 GMT, now we are in the late European session. So they'll be handling the majors. Then I told you that we note down the initial lows and the highs around 3:30 GMT during the Japanese session. And then also note down the net change. And once you see the net change that euro has gained positively, GBP is showing negative net change, which is a contrarian move. Euro is showing positive net change and USD-Yen is showing positive net change. It is a contrarian move. And also you find that GBP is showing negative net change, USD-CHF is showing negative net change, which is a contrarian move. So here you find in the case of majors, they are showing contrarian moves, whereas in the case of the commodity pairs, they are showing USD gaining move. So contrarian move is the one that euro is showing USD weakening move, GBP is showing USD gaining move. In such a situation, when both the numerators show differential moves, then it is referred as a contrarian move. So then we try to identify the type of moves they are doing it. So there are 3 categories of types of moves, namely a move which is very quick and it takes only less than 30 minutes. And they are namely the stop and the false move. Stop and is the one wherein they just go below that of the initial low and then hit some stops below that and come above that of the initial low and start gaining the levels. And that is referred as a stop and. And the false move is the one in less than 30 minutes it happens. Before the data release, they just go up to that of the high or up to that of the low and pretend as if it is going to breach. And after the data release, simply reverse the market. And that is referred as a false move. And always the false move will be followed by that of the extended move. In the case of GBP, they made a quick firming up before the data release around 9:30 GMT and then start making a very quick drop. And all quick moves are false moves. And because the data release happened to be around 9:30 GMT, That is, the European session starts by 8:30, 8 GMT, then up to 9:30 is the early session. Exactly towards close of early European session, they made a very quick drop to 1.5854 and reversed it. And now they have come to 1.59 level. And slowly they will make an upward spike during the European session. And we can understand now there is no market sentiment. So they try to bring a quick downward move and create the bearish sentiment and quickly reverse and rise and create a bullish sentiment. And can any of the economic conditions continue to change like this from bearish to bullish, bullish to bearish and things like that? So they only create such hypes, and that we need to understand. Then a move which is for more than 30 minutes. Morning, during the European session, I showed you that in the case of Euro, they just breached the initial low, 1.3390, came down, and they have been oscillating around that, below that of 1.3390, and just came down to 1.3380 and went up to 1.3390, not breached and not gone above. And then subsequently, they started making one downward move in tandem with the downward move in the case of GBP, and quickly reversed and hit all the stops and reversed. It shows very clearly that many of the traders have taken the sell positions in the case of Euro, and that is why they are not making any big draw. So they want that short sellers to come for short covering. So subsequently, you will find that Euro and GBP started gaining the levels, and USDN is not going to lose the level, and they will try to do during the mid-session, mid-year session, they will try to make a contrarian move of gaining the levels in the case of denominator as well as the numerator currencies. So here you find that a move which is for more than 30 minutes and up to 2 hours. So from the start of the session, you have to find out up to 2 hours. If they stop cutting the new low, the last 30 minutes, then we can try to take a buy. Then they will be able to quickly rise. Our stop will not be hit. Then in case, if they continue to breach the low or the high, depending upon the type of move on the upside or on the downside, and today we have seen the downside move, they continue to breach the low, then they go in for the 2 sessions on the start of the 3rd session and then try to reverse it. So that is referred as the intentional move. And during the mid sessions, they make the swings. In the market, we need to understand that always they alternate the intentional move with that of the extended move. And day in and day out, you come across these 2 types of moves. And in between, we come across stop-ins during start of the session, late session, then the false move before the data release, and also swings during the mid sessions. So these are all the types of moves they do it. If you could recognize, then your market fear goes off. Then later on, you find that you are able to do fearless trade. And still, we need to limit the risk by taking lesser position so that we'll be able to consistently make profit without any market fear. Casually, we can trade, still make very good profit from the market. Now, with regard to the positions, what I committed during the European session, I took a buy position in the case of, and it was only a limit order, 1.3382, and it was around 1.3390. Suddenly they made the drop and filled it because I wanted to keep 2 pips above that of the initial low the new low, 1.3380. Then they filled it and subsequently came down to 1.3359. My hedging order was at 1.3352. It was not filled, and then they started gaining the levels. And once it has gone above that of 1.3382 and went above 1.3390 and stayed there for more than 30 minutes, I kept the stop at entry and removed the hedge order. So you are able to understand that afterwards they will not hit my stop. And towards close of the session, I'll be able to book profit. So currently the high is 1.333432 and the time is 13:14 GMT. Around 13:45 GMT, we'll be able to close the position with a maximum profit exactly 15 minutes before the close. Afterwards, some profit booking will come. and then later on they will try to make a false move during the gap time between 14 and 14:30 GMT, and then continue to gain the levels during the US session. Now, you know that in the case of Euro, 1.3414 was the initial high. They have breached it, and during the gap time also, they will try to stay above 1.3414 and continue to gain during the US session. So once they breach and stay above that for more than 30 minutes, then understand that they will make an intentional move on the upside. So intentional move after the extended move, the intentional move. The intentional move will be a slow gaining move. If you want to really maximize the profit, then keep stop at entry and try to maintain the stop about 15 to 25 pips below that of the market. So when the market is around 1.3431, we can keep the hedge order at 1.3415 or 1.34 and then trail it as they gain the levels. So similarly, we can keep the limit order 75 pips above that of the high entry position. And when the going is good, we can just maximize it. And this is the second week of the month. And as I explained yesterday, that they are expected to make the week beginning false move on the downside. Then subsequently, either way stoppings on Tuesday. That is what they had done it on the downside. And now the drops are over. Then they will make an upward move and start gaining the level slowly as an intentional move from tomorrow. And that is what the forecast says. And still, no, you need not 100% believe the forecast. Use the trading strategy and limit the risk and maximize the profit. When the going is going to be good, why not you wait and maximize the profit at the lowest level buy positions? Then in the case of GBP, what happened? I kept a buy order. At that time, it was around 1.5944. The low there set it. And it was an extended move on the downside. And actually, the initial low was 1.5965. And that I showed in the previous slide. So below that, they just came down for about 15, 16 pips. So I kept the limit order about 5 pips below that of the current market at that time. And then it was filled. Then subsequently, I kept the hedge order 30 pips below 1.5916. As a knee-jerk reaction, they simply made a big drop. And then subsequently, it came down to that of 1.5854. And you know that they straight away made that drop and it came down to about 115 pips. And then subsequently, they stopped cutting the low for 10 minutes. Then immediately what I had done, I just booked a profit in the hedge at 1.5858 with 58 pips profit and took another buy because from this buy, it is almost to that of 100 pips. So I was telling you that you can do the averaging trade when the spread is very good. If you spread the risk and you will be really rewarded in the market. So it was almost close to 100 pips. So I took a buy also 1.5858 just to show you how exactly we can average it. Averaging is not nonsense. If you spread it with 100 pips, and definitely you will be able to see that you will take only about 4-5 positions. And if it is within your reach, if you are capable of taking about 4-5 positions of standard lots or mini lots according to your equity size, then you can take it even without a stop. And you'll find that as and when the positions make profit, we can keep stop at entry. So in the second positions, 1.5858, I kept stop at entry. And in the first positions, I kept the hedge order at 1.5865, and currently it is trading around 1.59. And as they gain the levels, I'll trail the hedge order and also trail the stop in the second position. And if you want, whenever you have a break even, because you have got a profit here, and when the average of these two, if you add these two numbers divided by 2, we'll come across around that of 1.59, and we are at break even. And we can simply close so that there won't be any loss, and still we'll be able to, we have profit on the downside. So that is what I was telling you, that if you use the hedging, then you will have a net profit all the time. And it is not that hedging will really confuse the traders, or it doesn't mean that the hedging So it doesn't mean that the hedging will really confuse or really make the trader not in a position to handle the market. So nobody will be in a position to say that I am bullish in euro or bearish in GBP for a long time. You can be bullish provided you like to take a buy and sell trade. When the trade goes wrong, immediately you turn bearish. So what is the big fun in just changing your mindset from bullish to bearish, bearish to bullish, bullish to bearish, and your mind is not having such capabilities of changing so fast, then immediately the fear grips in, and then you are not in a position to take. And when GBP has made a big drop, and if you are trading without a stop, I am 100% sure that you would not have taken another position at 1.5858. Because once the first position makes about 90 pips loss, you will just keep away from the market or try to close it with a loss. And if you are traded without a stop. So if you use the hedge, then you are able to book profit on the downside because the market can either make an upward move or a downward move. We are prepared for both when you have the positions. So then you find that after taking that averaging, we are able to come out with no profit, no loss on the buy side. On the sell side, we have booked net profit. And this is already in the profit. Euro is in the profit. And USD, when they just made a quick rise to that of 99.80 and then stopped cutting the high when GBP came down, and I understood that they wanted to make a drop in the case of, because once they stop cutting the new high for more than 30 minutes, that means they wanted to make a swing on the downside. And 99.60 is the low. They will come back to that of 99.60 before going upward. So I just booked 11 pips profit, 99.78 and closed that position. And in the case of Australian dollar, I had taken 93.32, 93.02 is the hedge order. Still, they are holding around that. And they are not filled with hedge also. So it will take some time during that of the late European session, and I'll be able to book profit. So we need to understand that the market is here to make up and down moves, and we need to identify how exactly we can handle and the market and perceive the market and try to make profit from that other market. And that's the most important thing. So if you become afraid of the market, then we will never be in a position to earn money from that other market. And you may think that the market might give profit on certain occasions, and it is bound to show you some loss also. Consistently, nobody will be able to read the market correctly and take 100% calls. And definitely, I can say that the call can be 90%. And still, the 10%, the calls can go wrong. In such an event, what happens? When the market goes against, I should be prepared with a trading strategy. I should not do the crisis management. Instead, I should have the contingency plan. And only then I'll be able to earn the money from that other market. Otherwise, the fear is going to grip, and ultimately I am going to miss most of the actions in the market. So what is more important in the market is the right perception. If you observe the market with the right perception, then you will be able to identify the great opportunities which are available in the market. And as far as GBP is concerned, people might be still bearish. And it has come to about negative net change from 120 to 85 pips. And once they go above that of 75 pips, because they are making the either way stop and move, and now euro, it is now 13:30 GMT and another 30 minutes to go on the upside. And later on, they will try to make a small dip during gap time and continue to gain the levels during the US session. And because it is an intentional move after the extended move. And so intentional move will be the slow gaining move on the upside. You can simply hold the position and maximize the profit also. And for the sake of confirming the profit booking, we can easily book the profit around 34.25 or 34.26 in the case of Europe, and in the case of GBP, on the second buy, we can book the profit around 59.03 and hold the first position with the hedge order just 15-20 pips below that of the market and trail it upward and book profit also. So once you use the hedging, we have ample opportunities of closing the positions. So either you can just close both the buy positions above their average with a net profit, or you can book profit on the downside of the hedge and book profit on the upside on the individual buy positions. Only if you hold the positions, you will be able to book profit. If we don't hold their position, we can theoretically say that is a good call and we could have taken a buy position and definitely would have seen a very big profit. The players are very clever, cunning. I can just shout at them or yell at them and I don't earn money out of that. Ultimately, we know day in and day out they are doing the same job of trying to deceive the traders and try to earn their money. So there is no point in blaming them. Instead, what we have to do is we have to identify that what they are trying to do it and understand their limitations on the downside or the upside. I have given it in my trading system webinar that they can drop or rise about 150 pips. And you know that last Thursday when ECB announcement was there, Euro dropped about 200 pips and then subsequently gained back. And that is how they do it. And so we need to understand it might drop 200 pips. Immediately we should not become bearish. And they try to do the move in such a way to hit all the level buy sell stops. And once they hit all the sell stops and when they gain, there won't be any buyer in the market. Buyers can come after the rise. And so they are the only buyers and they are the only privileged people to trade in the market. But they will not trade unless and otherwise the traders commit positions. This is a precarious condition. So they hold the market for the traders to come in and pretend as if the market can move in tandem with the technical analysis or fundamental analysis. Later on, they'll show their true color, the act of cunningness. So I explained to you the trading, how exactly it has to be perceived. So let me try to read the market timings, and this webinar is being recorded. Otherwise, on a daily basis, on Asian session live market also, I show this slide. You can make a note of the timings. And this is the timing followed by that of the players. No, they ask us to follow the Asian session, Japanese session, Australian session, European session, UK session, US session, and post-US session, etc. But ultimately, they follow this system. And if we note down these timings in GMT time frame, and they probably make us to conveniently use the local times like New York time. But the players use the GMT time because they have to operate the market 24 hours. So keep in mind that some part of the world they will be sitting and manipulating the market. And we will find that market is manipulated 24 hours. And one single group cannot do it, and it is a consortium, and they try to handle it. And they have various mechanisms to handle it. So we will not go into the depth of it. Ultimately, what we have to see is identify their strength, identify their weakness, and just to exploit their weakness. Similar to that of the players exploiting our weakness of emotions, we should try to exploit the weakness of the players. As long as they are human, they also have the limitations, and understand their limitations and trade along with them. And how long one can cheat. And see, a person can cunningly cheat you once, twice in subways and things like that. But you will become cautious. And in trading, unfortunately, people try to find out what is a real solution or how exactly we can safeguard ourselves. People are not in a position to think of trading strategy rather than focusing on the forecast part of it. See, forecast, it is beyond anybody's control, because the market moves are beyond anybody's control. That is what I just found out in my 12 years of postdoctoral work, and it is not simply controlled by human. Besides, you find certain extraneous elements which are controlling the market, and because of sudden calamities, because of sudden moods, etc., you find various actions are happening in different markets. So we need a different tool to identify it. And I identified it, and based on that, I'm trying to give the forecast. And now you'll be able to understand that the forecast is working. But still, I'm not telling that you follow the forecast, because ultimately a forecast is a forecast which has got limitations. And we need to use the market trading to fine tune and also use the trading strategy to limit the risk. And there is no point in telling that I have given the forecast that market will go up. It has gone up by 100 pips. Unless and otherwise it is realized in terms of profit, there is no point in telling that the forecast has come true. So ultimately, what is more important is giving the forecast is of theoretical interest. Doing the trading and earning the money is the real purpose of being in the market, real purpose of visiting FX Trade. So if you have got any questions, I am willing to answer to those questions. So if you have questions with regard to hedging, etc., and I'll be glad to explain. Drew, by cutting the low, do you mean that they are continuously making new lows? Yes, they breach that low and go down. That we will be able to see easily in the live market quote page rather than in that of the chart. Because as I explained in the chart, when there is a swing of 20-30 pips, and the chart will automatically magnify it, and you will see the chart, 10 pips drop will look like a big red candle. But once a 60 pips drop happens, the chart automatically gets reduced. There is a mechanism by which the chart gets adjusted with regard to the size. Then suddenly the chart shrinks, or the graph shrinks. Then you find the sudden, relatively a bigger red candle. Immediately it triggers your fear. That is why I said that chart gazing should be avoided. Because once the red candle is seen, immediately many of the traders become wow, and they say wow and get stunned, and they don't commit anything. And during such quick moves, we have to commit really the trades, but we become stunned. So we miss most of the opportunities, simply thinking about the events. Okay, then Stancy. GBP, the stop was hit at 59.16. When did you re-enter to make 58 pips? No, it is not a stop. It is actually the hedge order. In MetaTrader platform, it is referred as sell stop. And sell stop is different from that of a normal stop. So a sell stop, it is filled in the same currency pair. In US platforms, it is not available. In other platforms, it is available. But if even in US platform, I checked up with FXCM, that when the trader is of non-US nature, then they are providing the hedging facility for that of the traders. So a sell stop is a one, and if it is filled, we'll have a buy position as well as a sell position. It will not offset the buy position like a normal stop. And you will come across in the platform, the window, the options, buy limits, then sell limit, then buy stop, sell stop. Then Allen. 59.6, we are sell hedge positions. Okay, Allen has already explained. Then Allen. If you cannot hedge, it is just a sell stop. But he used, okay, fine. Then settings. Do you use any indicator to enter? No, sir. I use only the live market quote page for the past 15, 16 years, I'm using only the live market quote page and successfully doing all the trades, I find that chart gazing is really a distractor. Being a statistics professor, I have been extensively using it for 15 to 16 years and found that they are the real distractors for us, and which creates the fear. And so I do not want to get the market fear again. I only look into that of the live market quote page, and this quote page is slightly slow, 15 seconds delayed. Then, I have another quote page. One of my student has just got the quote page for me, and which is really updating every second. So when people work towards that, nobody can stop it. In order to explore and identify the truth of the market. Then, Drew, could you please explain how to use hedge order again as opposite to swap? See, in the trading platform, in MetaTrader 4 platform, you come across the pop-up window in which you can take a buy position or a sell position, and you come across market execution, and also you come across the other type, and there you will be able to select. Sorry, I will not be able to show the platforms for you, and you just go into that and read the manual. You will be able to get how exactly you can use the hedge. Now, how to use the hedge order? That I can explain that in the same currency pair, if you have got a buy and if you use the sell stop, then it will act as a hedge in the same currency pair. It will just limit your drawdown, and automatically when the market moves against you, and the usable margin will not go down, and you will be able to book profit for either way trades on the downside as well as the upside. Otherwise, you can simply keep stop at entry in the hedge, and once the market reverses, your stop at entry will be closed, and on the buy side, you will be able to book profit. In the case of Euro, I could have just simply kept the stop at entry, and in case if it is hedged, and if they go up, then the hedge is filled, and on the buy side, I will be able to book profit. But as such, they did not drop to 33.52, so I was not hedged, so I did not worry. Then FX trap. Your strategy is very effective, but I do not have the same confidence as you have with hedging. No, ultimately, it is a question of understanding. No, if you perfectly understand a mechanism, then you get more confidence. First of all, for that, you need to have self-confidence. So once I have self-confidence, then I will try to absorb any of the new information and try to perfect it, and then gain confidence in using it. So similarly, you would have seen a lot of people driving the car. So when you sit adjacent to the driver to start with, you find that the driver is driving the car at ease, but you also feel that, okay, I can also drive. But once you are asked to sit there when you are not learned to driving initially, then you find that it becomes nervous. But in the course of time, you learn the art of driving. So similarly, you learn the art of trading. So it needs focus and concentration, nothing more than that. And you think that, see, many of the traders have got, unfortunately, a mindset. Okay, leave alone the market. I got about $15,000. So in about 6 months, I should be able to double it. So they always set the target. And suppose they contact any of the forecast provider or any of the money managers, they simply say, okay, if I give $50,000, how much it will become in 3 months' time, 6 months' time? So this is the only intention. They are in a position to fix the target, but they fail to understand the process to achieve the target. So it is something like climbing a mountain. And if you want to climb the mountain, first of all, you have to look into the first step, second step, And step by step, if you climb, and in a matter of time, you will be at the top of the mountain. But if you look at the top of the mountain and start climbing it, you will fall, even at the bottom. So you have to look into the steps. So you have to focus on the process of understanding it. It is something like a university education. In that, you gradually learn step by step. And you have to learn it in that way. And it is not, trading is not something which is unscientific, and which is very scientific. And we have to understand that it is, as long as it is being done by the human, and you have to find out, they will have the limitations, and you will be able to read their intentions. And any businessman, for that matter, when the client enters into a shop, the businessman will be able to identify whether the client is going to buy or not, whether he is going to do a window shopping or not. And it is reading other man's mind. Because of the experience, he gets that mindset. Similarly, you start using the hedging while doing it in demo trading. Don't be in a hurry to earn the money. Don't feel that when I am doing the trade in the demo trading, I'm missing great opportunities in the market. And it is similar to, without perfecting your driving, you are entering into the car and you want to go out station. Then John Mark. So at 1500 GMT, if Euro USD high has not been hit since 1430 open, it would be a swing sell. You are right. You are right. It will be a swing. Because first 30 minutes, if they do not make an upward stopping or an extended move on the upside, then definitely it will be a sell opportunity. But as we have noticed that they have done the extended downward move, and they will alternate with that of the intentional move. That is the intraday reading of the market. No, I cannot show MT4 platforms. Then Tom, how do you determine the daily trend? Sir, it is not an easy task. And see, I slogged for 12 years to perfect it. No? So I do not want to reveal it to anybody for simple reason that it should not be misused. Because so many people have asked it, and I just said that I will not give it. For unlimited money also they proposed. I'm not for money here. I want to help the small traders who cannot afford to even pay $50 or $100 as a subscription to many of the analysts. And they should earn money from that other market after getting rid of the market fear. So that is my only objective by which I am working with FX Trade for the past, from the start of FX Trade, 2001. Then Jekyll. What is a human factor in your strategy? Can it be totally replaced by automatic trading system? Not at all, sir. Not at all. As long as there is a variation with regard to the volume from time to time, none of the automatic system will be able to work. You can try any method for that matter. Do you offer education? Yeah, I do offer professional trader training, mainly with regard to the market reading and the trading strategy. I don't give my algorithm to them. Okay, so I think it is almost time. So I'm not taking any positions for the late European session. And so I take this opportunity to thank FX Trade for the kind of opportunity given for me to present the webinar. These are all my contact details, and I'm not promoting myself here, and it is only for those who are interested to get some basic informations and not for any subscriptions. Okay, so you can contact me. I will be willing to help you and giving the informations, and money is secondary as far as I'm concerned. Ultimately, the human value is important. And so I'm an aged person. I'm 61. So I have seen enough of money, so I want more and more of friends in this world. Okay. See you on 14th of October when I give the next Asian session live market analysis to review the forecast what I have done for this particular week. Thank you one and all. See you and on 14th, and till then, wish you a very happy trading and earning good money from the market without any market fear. Try to develop the skill set of get rid of the market fear. Then you will find everything you will be able to understand in the market. Thank you one and all. See you.